Hi everyone, it's Ron of Danieli Real Estate. I'm here today to talk about the rental market conditions. Over the last few weeks, a lot of people have been stopping me and asking me what I feel is going to happen to the rental market over the next 6, 12 and 18 months time. What we're seeing now in the rental marketplace is a correction of rentals. So people feel that the rental prices are going through the roof, but that is not the case. Rents during COVID dropped to the level that was seen around 2010. Now, what's happening now with the opening of international borders, with students, tourists coming back, with people removing their short-term accommodation properties from the long-term pool to lease out on short-term basis, we're finding that the rents are adjusting themselves back to the pre-COVID rates. So in theory, they're just returning back to the normal rate they were. And again, looking at supply and demand, we're getting more demand and the supply now is also diminishing because of the factors I've just discussed. At the moment, it appears that rentals have been going through the roof. However, this has to be taken into perspective. Another factor which has caused a shortage of long-term rentals in the marketplace has been that investors have not been coming into the market and buying properties to lease out. This was brought about due to two reasons. First, that during COVID, rents fell so much that investors could not borrow money from the bank because the rate of return from their proposed investment was not sufficient to meet their mortgage repayments. Secondly, a lot of these first-time investors lacked job security. During COVID, a lot of people lost their jobs or were laid off or put on part-time basis. So as an investor, they did not know whether they would have a job in the next 3 to 6 months' time. So this stopped them from proceeding to buy an investment property, coupled with the low yield they were getting from their proposed investment. My feeling is that the rental market is only going to get worse before it gets better. Now you may ask me, why is that so? Well, I think one of the main reasons is the Chinese tourists and students have not come back to Australia. Now, this is due to the reason that China still has quarantine restrictions. So if a student or a tourist comes to Australia, when they return back home to China, they must quarantine in an expensive hotel for a week. So this has abrogated them coming to Australia. Once that quarantine restriction is lifted, and we see a large influx of Chinese students and Chinese tourists, we're only going to see a tightening of the rental market, which will drive prices higher. Another reason which has led to such a shortage of long-term rentals in the marketplace is that first home buyers, for example, have now stopped from buying their property, their first home to live, because of the uncertainty in the market, in the economy. Interest rates have risen for the 7th consecutive time, and which has worried a lot of people. So they've decided not to purchase at the moment until they know what happens or what is going to happen in the market before they purchase. So at the moment, they are remaining as tenants until they know or have a clearer picture of what the Reserve Bank will do with interest rates. However, there is light at the end of the tunnel. With rentals returns increasing, which means investors are getting a decent rate of return from their investment, which can help pay their mortgage, we are starting to see investors come back to the market. And this is a good thing, because by investors purchasing properties, these properties will trickle back into the rental market and be made available for potential tenants. In conclusion, whether people will be courageous enough to buy an investment property in light of the fear of the interest rate rises is yet to be seen. So I suggest you stay tuned and we'll see what happens.